Some days I'm not myself. There's no one I can turn to. All the feelings that we shared are in the past. Your relationships are never meant to last. All the feelings that we shared are in the past. Your relationships are never meant to last. It might take some time, but I'll be alright. I'm moving on, moving on. I know times are tough, but I've had enough. I'm moving on, I'm moving on. Moving on, moving on.
Won't you take me to that place? Take me to that place. Won't you take me to that place? Won't you take me to that place? Won't you take me there, man? Because you said enough, you said enough, you said enough. Because you said enough, you said enough. Real love, now I see you. Yeah, you know I do to make it through the times we had. I see it now, I see it now. Real love, now I'll break through to show to you that I'm more good than I am bad. I'll work it out, I'll work it out. And I'll be somewhere that you need me, and I'll be holding my breath, waiting for you to show. Yeah, somewhere deep inside of you, I know you want me to. You're just afraid to say. Real love, now I see you, and I'll make it through to find the life that we once had. I see it now, I feel it now. Real love, now I see you, yeah, you know I do to make it through the times we had. I see it now, I see it now. Real love, now I'll break through to show to you that I'm more good than I am bad. I'll work it out, I'll work it out. And I'll be somewhere that you need me, and I'll be holding my breath, waiting for you to show.
What's up, guys? What's going on, everybody? Let me just get situated, get out of Twitter. Wasted too much time on Twitter. All right. So it's 3:05. I always list these as at 3 o'clock, but I always give, or not 3 o'clock. Today's the first one at 3 o'clock in a while. Had to change it up, but yeah. Good afternoon, good evening, good morning to everybody. Give me a sound check. How's the sound? Give me a sound check. Let me exit the music, and can you stop whining, please? What? D. Ross doesn't whine. Okay. Oh, you said winning, not whining. I'm like looking up in the chat. I'm like, guys, take it easy, take it easy. What's up, Captain Youth? Hey, Ryan, first time in the public stream. Saman. Oh, Saman, you've been on the other streams, though. So, I've got a 60% hit rate and a garbage return. So, garbage return. Gucci on the sound. I like that. So, we'll get to a few things. I want to say hi to everybody, but I could address a couple things right away. And X Factor, I'm just going to address this first. 60% hit rate. That's great. You know what? My hit rate right now is on the long side of things is around 65%. So on the long side of things is around 65%. On the short side of things is around, I think it's around 50%. So, figure long, short, that's around 60. And, I am a, I hate to say, I'm a successful trader. So 60% hit rate. That's awesome, man. Garbage return. So, you probably have to do better on more than likely where you take profit, right? So yeah. Okay, perfect. Loud. Sound is on point. What's up, Brian? Curious when we bounce soon. All right, B-Town Foo. Okay, so we have got a bunch of people in the stream. I like to see that. My name is Ryan, a.k.a. Cameron Clark on Twitter. My partner and I, Josh Rager, we are the founders of BlockRoots. We don't talk about BlockRoots a lot. BlockRoots is a community. It has a community on Discord. We have our website, which has a ton of learning learning resources on here. So we have a bunch of roadmaps. This is where we get really into the things that we talk about briefly on the YouTube streams. So we have an entire course dedicated just to order flow and market profile. We're going to be actually changing some things up in the near future, which is pretty exciting. But if you haven't checked us out yet, go to blockroots.com. We don't really market it that much whatsoever. I think it's just a thing about marketing in general that just feels kind of cringy. But if you're new to the stream, since I see there's a bunch of new people in the stream, check it out, right? That's where we really get into, that's where we really delve deep into the stuff that we go over just briefly on the streams, right? So, how is everybody doing? How was everybody's, let me go through and say hi to everybody. So, Keld, what's going on? David, Danny, Fuzzy. All right, so there's a lot of repeat customers, okay? A lot of repeat guests. Yes, D. Ross, pleasant Thanksgiving. Pleasant Thanksgiving. It was limited, here in New York, the law is you can't have more than 10 people. Most people I know, they stretched it, right? They tried to have as many people as possible without alarming any neighbors. Because that's one thing you have to be mindful of, right? Not only do you have to do the right thing and make sure that, you're doing your part to stop the spread, right? But you also have to, you have to be mindful of even depending on what your opinion is on it. So I have to be careful because depending on what your opinion is, right? Here in New York, there is the Supreme Leader Cuomo, who's a funny guy because he reminds me of my Italian uncle, right? But there are certain laws in place or certain guidelines in place, and I don't know too many people that follow them. My wife and I, we had just our parents, siblings, and I was kind of just weighed down the entire day by my nieces and nephews running around and going through everything I had. So it was a long, tiring day, and Thanksgiving. I like the holiday because it's a non-commercial holiday, right? There's really no commercial aspect to the holiday unless we're going to say that it's a holiday for grocery store companies or grocery chains or grocers. But there's no commercial kind of over-commercialized aspect to it. It's just nice to get together with family. And I think that around this time of the year, it's becoming kind of, it's not depressing, but it's getting old, right? Thanksgiving, and then we have Christmas. That's a big time of the year. It's a big thing for my family, and I can't wait for this to all be behind us, and who knows how long that'll take. But I hope that it's sooner than later. But on Thanksgiving, you spend time with your family, and you eat, you drink, you be merry, kind of thing, and it's a really tiring day because eat, drink, be merry. I'm pretty sure that that's the tagline for like Christmas and Hanukkah. But Thanksgiving, all you do is just eat, so you're just weighed down, right? Just weighed down. By the end of the day, you just pass out status. So. I don't even drink, so I was just in a coma from food. But yeah, hopefully everyone had a good Thanksgiving. Happy Friday, right? Happy Black Friday. So today I'm going to be giving away, an Xbox, a PS5, or the equivalent in BTC. Now I said an Xbox first, so let's get into this really quick. So first things first, I said, you know what? So I plan on buying the new Xbox. For those of you that have been following along, like I said a couple months back when quarantine started, I got into playing Xbox. I got into playing Xbox with my brother. Let me just make sure that this stream looks okay for where my head is. Okay, it is. So you see that little B right in front of my face? Let's make me a little bit bigger. Okay, so to get the B out of my way. Okay, so the B is actually not that much in my way. One sec. Okay. All right. So I pulled up the YouTube stream on a separate window to make sure that everything was good in terms of the way it looked. So what was I saying about playing Xbox? Okay. Where did the stream go now? Are we still streaming? One sec. Alrighty then. So Alt Tab. I think I just lost that. One sec, guys. I think the stream is still going either way. Should be. So let's go to streams. Pain in the butt. I just canceled out your, what I did was I just canceled out your chat. So 1 second. Here we go. Okay. So chat should be back. Excellent connection. Blah, blah, blah. Okay, pop out chat. So now pop out the chat. See what I do? I don't know what I'm doing, so I mess things up. All right, so minus that. Let's get my chat up. Let's get it going. Okay. So what was I saying? So I was thinking, you know what I'm going to do? I'm going to be buying I'm going to buy a new Xbox. Like, why the hell? I'm a gadget kind of person. So if I'm the kind of person that I have an iPhone, right? And I really like the iPhone. And it's just because I'm familiar with it now. I don't know, maybe Droids are superior, right? But I'm familiar with iPhone. So you just stick with what you like and what you already enjoy. Which obviously there's some negative aspects to that if you're going to practice that throughout your life. But I like the newest and the shiniest when it comes to tech. I want to stick with the front of tech, not the tech that's old. So I'm thinking I'm going to get a new Xbox, and then I'm thinking let me do a giveaway. So immediately I'm like, I'll give away an Xbox, forgetting that not everyone plays Xbox, not everyone cares for Xbox. Not everyone cares for Xbox. Okay, I'll give away a PS5. Okay, maybe no one cares for a freaking PS5. Maybe they care for the Nintendo. So whatever. So it'll be an Xbox if you want it to be an Xbox. It'll be a PS5 if you want it to be a PS5. Or, you know what? It'll just be the equivalent in BTC. Because at this point, some people don't even want to give away their address to have me ship it to them. So I think that whoever wins during the stream, take the Bitcoin, buy whatever you want. I don't care if you buy, new rims for your car. I don't care if you buy, an Xbox, the new Xbox. So we'll do that towards the end. And what I'm going to do is, if you haven't already participated, guys, what you have to do is you have to go onto that link that is on my Twitter page. Okay, so go onto that link. You have to be a subscriber onto the YouTube. So click the like button. So wherever the like button is, click the like button. Be a subscriber. So you see right around here, there should be a B. Click the B. All right. Make sure that those two stipulations are satisfied. All right, and then go ahead and go on to the onto my Twitter page. I have the post that has Oprah Winfrey doing the giveaway thing, and leave a comment. And then at the end of this stream, what I'm going to go and do is go to Tweet Draw, and we're going to pull up the comment from that. So it's going to be random, right? So that's another reason why we should just give away BTC also. So if you choose to get the Xbox, by all means, whatever. I think it might be a little bit more difficult than just taking the Bitcoin. Okay, so sound is good. Everything is good. Great track. I don't know what track that is, Stan, because what I did was I found a copyright-free playlist so that we don't have to worry about this coming down. Grinding on music, working. Okay, so that music is off though, right? Music should be off, right? I think the music is off. Okay. All right, so I'm just going through the chat. Okay, New Yorker for life. That's right, Comienda. Okay. All right, good stuff. Love from Syria. Okay, so went through all the chat. Everyone who's here right now, again, if you could just hit the like button. Right, we have a bunch of viewers right now. If you get the likes up, and once we get 50 likes, we will start the stream. I have a thing, a couple things I want to go over, but I want to treat this stream, as an open stream for you guys, so where I could just basically take your questions, right? Take your questions, take your charts, all right? So whether it's going to be charts or questions, it's up to you. But I want to get to know a little bit more about you guys. We're going to talk about Bitcoin, obviously. We're going to talk about Bitcoin. We're always talking about Bitcoin, right? We're always going to touch on Bitcoin. So the likes are going up now. The parity it's getting a little bit tighter. So once we get those likes over 50 likes, we'll start it up. So we're going to go over Bitcoin. Going to go over some key points, right? Because the last stream was pretty telling. So for those of you that were in the last stream, I have been a bull this entire time, right? I've been a bull this entire time. In the last stream that we did, I was, if you've been following along, it was very cautious, right? It was very, okay, let's back up and take a look at where we currently are, right? Let's not get ahead of ourselves. Let's look at some of the finer details that we normally look at, the market generated information, all right? Forget that we're very bullish on this long term. Let's consider what's going to happen in the short term. So there's a few things that I think that we should reiterate on with regard to that. And then, then we'll take the questions, and we'll take the charts, and we'll get it done. We won't waste too much of your time. All right, so the likes are there. We're 2 away from 50. I think that's perfectly fine. Okay, so really quick, I just want to ask you guys, get a little bit of feedback, right? I just want to poll the group. So how long has everybody been trading for? And this could be, if you just started in crypto, completely fine. If you've been trading for years, I just want to know how long everyone has been active in markets. So myself, I'm going on 14 years now, so I'm pretty damn old. So how long has everyone been trading? How long has everyone been investing? Just want to get an idea based on years. So if it's months, say months. If it's years, say years. But give me a little bit of feedback. I think it's really important to know at any given time who I'm talking to, right? So if I do these streams and I just get right into the really complex stuff, which I don't find to be complex. People who are members of BlockRoots, they probably don't find it to be complex anymore. I'm sure everyone in BlockRoots can attest to you that the stuff you look at that makes you go, "Ugh, what's with that chart? Why does it look like that?" In a half hour, you could really come to terms with what you're looking at, or not come to terms, but it's something that is very easily digested. So okay, so all right, great feedback, guys. Good to see. 3 years, 1 year, 4 years, 1 year, 3 years, 4 years, 1 year, 4 years. So a lot of that fits within crypto, I think. Ripcord, 35 years, man. Ripcord, 35, you just gave yourself up. You are an old man. Old man. All right. Good stuff. Okay, 10 years. All right, cool. 6 months. All right, welcome to the machine. Welcome to the machine. All right, so 3 years, 4 years in crypto. Okay, 5 months, 1 year, 3 years, but the cumulative period is a bit less than that. All right. Okay, Stan. 1 year, 5 months. Okay. So it's a good mix. So 1 year trader, 7 years investor, real estate shares, etc. Okay, Carlos. So that's cool. So you understand markets though, right? If you're an investor and if you're in real estate, you have at least a foundation in how markets work with regard to supply and demand. Okay, market analysis, 2 years, active trading perps, 6 months. So market analysis and then right into trading perps. Sounds like you went from boot camp to working missions with the special forces right away. There's no comfortable medium right there. The X factor, market analysis for 2 years, and you just jumped right into complex products. What's your Twitter, please? It's Cantering Clark. So let's go to that really quickly. So I want to keep this stream kind of light, right? You guys saw I posted today, and I have a very extemporaneous approach. Okay, it's off the cuff, no real script. I'd say I'm plenty informed, but I don't go by any kind of script. So we're just flying by the seat of our pants. So if we go to this post down here, if you go to Cantering Clark, at Cantering Clark, and you'll see that down on, we're almost going to find it. That's right, I made just under a BTC yesterday. Trading on Thanksgiving. That was like, why am I, so making that much in Bitcoin is not something that is uncommon at this point in my career, but the fact that I was able to do it while my wife was cooking was even better. Okay, so where is this? because so I'll get into that in a second because that's really funny. Or I think it's really funny. Okay, coming down to it. I know it's so here it is. Here's the post. So I'll share this post. What I'll do is I'll share this post in the chat. So copy link to tweet. Okay, so paste it. Okay. So yesterday was good because I told my wife, I said, listen, I'm going to help you out today. Like, I know family's coming, etc. I know she does the cooking all the time. And she's a phenomenal Thanksgiving chef. I pretty much take care of cooking every other day of the year because I love to cook. But it's like a form of meditation for me, especially if I'm coming out of the market and I need to kind of cool down. But I was like, I'm going to help you. And I would help her. I'd put the timer on something and run back to the computer, and I was just scalping all morning. And then finally, come around 3 o'clock, I had to just step away from the computer because it was family time. But I made under just a BTC, so about 0.8 BTC yesterday. So I kind of pat myself in the back to be able to do that because my wife was, she wasn't exactly aware that I was getting away with it, that I was going back and forth to the office and back to the kitchen. All right, so cool. Okay, so good stuff. So everyone answered. All right, so we have a bunch of, most of the traders in here, they fall under, they're on the, they're market, I don't want to say market virgins because, so here's the thing. If you've only been trading for a year, 2 years, 3 years, right? So I've only been trading crypto for, going on 4 years now, right? So going on 4 years now. But the amount of activity within that 4-year period that I've experienced, I could say that is, you would need as a traditional market trader, depending on your approach, right? You would need to be trading in traditional markets for like a decade. Okay, so 3 years in the crypto markets, it's like dog years. Okay, so 3 years in the crypto markets, like 10 years in traditional markets. Just in terms of volatility, in terms of market cycles, the velocity of the market, it is light years compared to, it's moving at light speed compared to traditional markets. So if you are learning in this market, I think that the things that you're learning in terms of technicals, they might, so they do translate to other markets. So when we go through market profile, when we talk about order flow trading, when people are using moving averages and RSI, people use those in traditional markets. Independent traders use them. Professional traders somewhat use them depending on what kind of professional trader you're talking about. But it's not that I think that you really gain by sticking it out in crypto. I think what you gain by sticking it out in crypto for something like, for example, this market cycle is it's the war wounds. Okay, so what is that saying? If you see a knight in shining armor, the fact that their armor is shining, it means that their armor hasn't been tested. They haven't been to battle. And I think that the one thing that you can say about, being someone who's been in crypto for, whether or not it's a year or 2 years, 3 years, or entire market cycle, is that what you gain is that grit, right? So that really it's just that you're battle hardened to some degree. Okay, you have the dirt under your fingernails. You got a bunch of wounds at this point. And the psychological stuff that you have to deal with is something that would take years to deal with in traditional markets. We're talking about, peaks. We're talking about all the valleys. We're talking about accumulation, distribution, the entire market cycle. Okay, so that whole range of emotions that you have to experience, it takes a really long time in traditional markets, which might be speeding up more recently, is something that if you've been in crypto for the last 4 years, you've gone through that. So if you can take that, I think that that kind of intestinal temerity is something that you could bring to traditional markets and I think clean up to a certain degree. Not clean up meaning you could just take what you learned here and then go to the equities market and expect to be a multimillionaire in a year, but I think that it sets you up with a certain level of intestinal fortitude. Right, I don't know how to put it without getting into those terms, but the crypto market, if you've made it this long, I think you could pat yourself on the back. So the thing about it is obviously over time, realized volatility is going to drop. Volatility should drop as prices get, as prices increase in value with regard to BTC. This doesn't mean everything will. Kilgore, what's going on, pal? Trader for 2 months. Okay, so now asked about how long you guys have been trading. So how frequently do you trade? Okay. How frequently do you trade? So are we, in the course of a 7-day period, how many trades would you say you take per day? Okay, so or on a per week, how many trades are you taking? And if you consider a round trip, one trade. So if you open a trade and you close the trade, that's one trade. Okay, so a round trip. How many round trips are you taking a week? Now, if you only trade one time a week, okay, that's fine, right? If you trade, a few times a day, then maybe it's better to say it in daily terms. Okay, I just want to get a sort of a feedback as to what type of level of activity you guys are taking part in. So whether you're higher frequency or you're lower frequency. And higher frequency, I'm not saying that there's any HFT people in here. And by HFT, I mean actually high frequency trading. I'm talking about the frequency, the amount of trading that you trade in just normal relative terms. So 2 per week. Okay, so 2 per week. Okay, cool. 2. So the thing about this question is, so AM 2 per week. That can mean that you are maybe an intraday trader, but this week there's only been so many opportunities. Okay, or you're 2 per week and you are, a short-term momentum trader and you're swing trading over a 24-hour to 48-hour period. So okay, so too many. Yeah, DXDT, absolutely. Totally. So in crypto, we see these crazy standard deviation moves way more frequently than in traditional markets. Now every day. Okay, scalping 2 to 4. Cool, John. All right, full-time trader scalper. Okay, so we have, this is cool because, all right, so very low frequency. So good for you, Ripcord. Good for you. Trying to learn properly first. 2 to 3 a week, heavily rely on help. Okay, so Degen. All right, so Tybalt. What's up, Tybalt? What's up, buddy? Okay, so started every day about 3 weeks ago. Probably making 3 to 4 trades a week. Okay, all right. So the thing about, so it looks like from just panic selling and FOMO buying. What's up, man? What's up, Dave? So panic selling and FOMO buying. You're reactive. All right. So I guess Maddie, you might be one of the people that are trading less than everyone else, or trading for a shorter period of time. So the thing about that, okay. So when I first came to crypto, I was a lower frequency trader. Okay, so by again lower frequency, I just mean I traded less frequently in crypto because I was still so immersed in traditional markets. I didn't really have time to devote to crypto like I do now. So I was taking more of a swing trade approach, and the market at that period when I came in was friendly for swing traders. So obviously, as I have made this my full-time area, this market specifically Bitcoin, you could say specifically crypto, right? Even though 99% of my activity is in Bitcoin, I have taken a higher frequency approach. Now, for anyone who is new to trading, you'll hear, when you first come into trading, you hear, stick to the higher time frames, don't trade the 5-minute chart, don't go down to the low time frame chart. That's actually not true, right? The idea of don't go down to the lower time frame chart, don't trade the lower time frame chart as if there's nothing to be traded there, that's false. The problem is, if you're a higher time frame trader, then you're going down to the lower time frame chart, right? Trading frequently is good because once you have, when you're trying to establish a system, the benefit of trading frequently and being a scalper, for example, is that you are going to build a lot more data to actually validate or invalidate that system in a shorter amount of time, right? You get more swings, you get more opportunities to really test your system or your strategy. And if you're trading less frequently, you're not going to get so many swing trades. So, for example, when we look at a chart from the higher time frame, I always point out the higher time frame levels. So the first thing that I do and the first thing that we do is, we will mark out the main levels on the chart, right? So I will always keep in mind where my weekly levels are. So right now, where my weekly levels are, this is the highest weekly close that we put in this leg. So weekly levels, and I'm just roughly matching these right now. So I know where my weekly levels are. Okay, I want to know where my daily levels are. So again, roughly. All right, so I want to know where these levels are. Okay, the more recent levels that have served to act as a turning point for price, pivot points. I know where these are, okay? I always want to know where they are so that in advance, if we're traveling in that direction, I have an idea of where to look for to see that reaction. And then not only that, I need to know where the levels are that really change everything, okay? So either change everything for the good or change everything for the bad, or at least in my opinion, they change things to a large degree. Now, from there, I go down to the lower time frame, and it's not low time frame, but it's just I'm looking at more recent structure, and then I'll mark out my levels based on our more recent sessions. So let me just change the ink, okay? But I'm going to get to a point, you'll see. So I'll mark out the more recent levels. So right now we have a poor low. Okay, we've been pretty much establishing value within this sort of, we're looking at right around a 1,300. That's a pretty damn big range right there. That's a $1,300 range right there. But this is the area that we're confined to for the last 2 days. We're looking for value to accrue here. This is clearly where it's accruing. This is where range might be developing. I have all my local levels, right? It's zoomed in to a degree, but even then, when I know these levels, right? So I know where the value area, I will compress this now because most of the activity, it did begin to base out over here. So I know I have a poor low from today that's right around here. That value area low is right around here. Value area high, okay. So I know from this structure where the value area high, value area low is. I know I have that poor low down here. I know that now we're sitting over the point of control. I have a few areas that I can add to look to in advance, but still, like, I don't have trades. If I'm saying that that's my only criteria, then I don't have to trade half the time when there might be trades that are available throughout this structure, or rather within the structure. So the idea is, if I was to be outside of this time frame, even zoomed in on the intraday, not looking at something like the session TPO, and I was only, limited to the daily levels and the weekly levels, how many trades am I going to get in a week period, right? If I have a system that's built around daily swings, right? So, okay, so here's my system, here's what I'm trying to test. I want to see the first retest of a weekly level. Okay, how many times are you going to get that? I want to see, my system is going to test the response we get in percentage terms off of the first revisit and retest of a weekly level. I want to see on average, what kind of response we can expect to get. If it's a response of on average maybe 5%, how long does it take to actually see that yield? Am I hanging on to the position for a day? Am I hanging on to a position for 5 days? Is this a swing position? Is this an immediate trade opportunity? Well, I got to acquire a lot of data to really determine that. And you're not going to get that too often, right? You're not going to get a weekly setup like that too often because, again, it's just limited. It's so high time frame. So these levels I need to know, right? But higher frequency trading allows me to acquire a lot more data if I'm testing a different type of thesis, right? If I'm looking, okay, so if I'm looking at how intraday levels respond, obviously I'm going to get a lot more intraday level setups, right? So if you're trading more frequently, you're going to build a larger pool of data to actually make decisions off of and to say, okay, this strategy works, this strategy, I know sooner whether or not my strategies work or whether they don't work, all right? So that's just something to think of. But I wanted to get those questions out of the way. So we spent about 20 minutes just shooting the shit, finding out how. So what most of you guys actually do have a decent amount of experience. So your experience might not, I could tell it really doesn't really go beyond crypto. So when people say that on average they're trading 3 to 4 years, that kind of makes sense because what that does is that fills in, or that fits with when most of the people came into crypto, which was the major retail rush at the end of 2017. And then it looks like you guys actually trade quite frequently, which is good because I'm trying to make sure that I also keep this material as tailored as possible to you guys, because I don't want to be sitting here talking about baseball, which I refer to, when everyone is here for basketball, right? So I don't want to sit here and delve into what takes place in the lower time frames when you guys could really only care about the weekly structure and something like stock to flow, which I think is ridiculous. Not to bash that, but you get the idea. I don't want to harp on the intraday stuff if you're only interested in learning how the 20-period moving average works on the weekly structure. Okay, so let's look at some of the questions, and then we're going to get into it. I just want to take a look at Bitcoin, go over, why did my tone change so much during the last live stream? Why did I suddenly go, okay, let's back off it and be cautious? Let me just see the questions really quick. Brand new, haven't made one choice, so still answering the previous questions. Here's my problem. Let's say I buy Uni at 397 the other day and always spot on Binance or Phemex, then it's going to okay. I leave it now and look to see it's 325, so that's bad. So the only thing I'm in right now that's an alt is Aave, which I added to. So from chop buy, hell solo, okay. So from chop buy, high, sell low, etc., not taking profits is my problem, as it's spot buys, not futures, so not clear what you have won or lost. So here's the problem. You said your problem right away, which is not taking profits is my problem. So here's how new traders trade, right? A lot of the time this is yeah, I'm here for the hockey too, right? So a new trader, you could tell them that this is, why are we drawing a squiggly when we could just do this? You could tell a new trader that this is a higher time frame level right here, right? So we could say high time frame level, very important, okay? And you could tell them that the same thing is down here, right? Cross above, this is a good buy. They know in advance that this is a very important level. I'm just trying to keep this as, I'm dumbifying this, right? This is a very important level. This is a very important level. New trader gets in a trade. Oh my God, it's going in my favor. It's going in my favor. They get to the level that they know in advance is the level where they should consider taking profit. And the new trader always just holds on. They just hold on because they think this is going to be the trade that everyone talks about, that they get, I'm going to make 10x on this trade. What happens if I sell and it keeps going up? All these things start coming into a new trader's mind. What you said in the beginning was exactly it. You don't follow a rule. It's a rule, right? So to be a successful trader, you have to have rules, okay? You live and die by your rules. You live and die by the system that you build that is defined by those rules, okay? You're only as good as your rules, right? If you don't have strict criteria for entering a trade, for exiting a trade, okay, for determining when you might want to change your reasoning for exiting. So do conditions change during the trade that warrant getting out of the trade? Okay, so how do we judge whether or not things are changing but not worth getting out of versus getting out of? You have to have all these things defined in advance. And the most simple thing is knowing in advance your main target is ahead of you, and that holding through that is a poor idea because more often than not, you'll see that a certain level will be respected. So you said, you don't take profit. So why don't you take profit, right? It's because you're not following a rule, right? Something as simple as taking profit at a significant level. If you don't follow your rules and you just try to trade on a whim and wing it, you're never going to make it ever. Okay, so delta divergence absorption at the lows. Okay. Yeah, so I haven't been looking at BTC, but we're going to get to that in a second, Dem. But yeah, we're starting to see clear signs of that. Okay, so I want to just look over the BTC chart really quick. I'm looking at the screen as if I'm looking at the camera. The camera's right there. Okay, so one thing that happened. So let's talk about how the market has been for the last few months. So what we've seen for the last few months is that spot has been leading. Okay, I had what did I have this open for writing this article for Phemex. Clearly for most of the move, the whole narrative, it's not a narrative, it's a truth. Most of this market has been moving based on a spot push. So there is an institutional bid, right? There are these major players that are coming into the market. This is not fluff, this is not noise, this is actually something that you're starting to see, right? Whether it's MicroStrategy, and the other day I made a point about MicroStrategy. I wasn't bashing Michael Saylor whatsoever. I just wanted to say, let's not forget that there's a bunch of other people that believe in this, and it's not just one person, right? I get it. Michael Saylor is a phenomenal thing for crypto, but that wasn't my intent to say, why are we caring about this guy? That wasn't the point at all. But we see that there's this institutional bid, right, which is a spot bid. They're not buying Bitcoin on BitMEX or Bybit and perpetual swaps. They're taking Bitcoin off the market. All right, they're taking long-term positions in Bitcoin, and that is taking supply off the market, and that is actual organic demand for the underlying spot instrument. So we've seen this institutional bid. We've seen that there's a pattern of occurrence, right? Monday mornings was something that I referred to. Okay, Monday morning bid, right? Coinbase Monday morning, New York Open. Okay, we would see that there is a TWAP that is being implemented. So a TWAP is a time-weighted average price. So if you are a large player and you're not necessarily certain as to whether or not you're going to get large positions filled, and you're not really going to be better off using them to begin with, because once your presence is known, you're going to move the market. So MicroStrategy can't really, place a limit order for Bitcoin to buy Bitcoin for the quantity that they were going to buy it, right, without making it very obvious. So a larger participant that doesn't really necessarily care about getting filled at, within a small interval of space, they can use a TWAP, right, which is a time-weighted average price. And what it does is essentially it's a market order placed every, let's say a TWAP of 5 minutes, a market order placed every 5 minutes for a set interval amount of, in this case, Bitcoin. And if you have a thick market, this is good, right? So if you have a thick market, The justification is, do I put on, am I trying to get filled with a limit order? No, you're probably not going to get filled, right? Your presence known is going to move the market. Okay, so not going to use a limit order to get filled. Okay, so do I mark it in altogether? Absolutely not, right? You can't mark it in for $500 million in Bitcoin. Of course you could, but you know what you would do to the price. So what you can do is TWAP in. So let's say you buy a little bit of Bitcoin over a weekly period, and you buy it by this amount at this amount of time, or with this interval of time between purchases. And the idea is that as the book is changing over that period of time, your market impact will be less than if you were to buy in large chunks. So this has been something that has been occurring actually quite frequently, and has been the case. So I'll go to something like, let's go to the tape, for example. So where are my bookmarks? So go to, we could just type in Agri. All right, so what you would see with a TWAP, and this has no orders yet to see, so it's not going to be. So let's say that a TWAP for 150K. So here's an order on Bybit at 1792, and it's 150K. What you would see with a TWAP is like 150K, 5 minutes later, 150K, 5 minutes later, 150K, and that being over and over again for hours. Okay, the idea is to just pick up supply in this given area, right? We're gonna have this, we're gonna TWAP in over this interval of time, and it's just a consistent bid, right? It's a consistent purchase. So this is something that has been well known. It has been known in advance, right? So if everyone is aware of something happening, there are people that are going to be placing their bids and placing their buys in anticipation of that behavior persisting, right? They're extrapolating based on that continuing into the future. That, extrapolating means to continue into the future, or to project that into the future. But their actions are dependent on that showing up constantly. So actually this week we saw that bid, or that TWAP behavior, it wasn't there, right? So New York Open came around and there was no institutional bid. The books where there was really not much activity that was present as there had been prior. So once this happens, right, what happens when the next session begins? Okay, so something like the Asian market opens up and sees that there's no Coinbase bid, there's no New York session bid. Okay, so they're going to change their behavior as well. But the last person to change their behavior is who? It's the retail participant. Okay, so what we saw on something like Bybit, for example. So we'll just, this is BitMEX, and the same thing was on BitMEX. I tell you, BitMEX is still actionable. Is that up into this high, we saw with things like funding. So we saw that basis had been increasing substantially. We saw whether you could go to skew.com. I'm not sure if this is people are going to have access to it, but if you go to skew, you could use the premium index. You could look at something like we could go to CryptoWatch, and we could look at all the prices. And if you had BitMEX, you could see that BitMEX for a large portion of this time is trading at a premium. In the pullbacks, it wasn't, but for the most part, most of the move up, it was starting to get overextended. So we're seeing that futures on BitMEX, on Bybit, are starting to really trade more aggressively. The long side is starting to trade more aggressively towards this high. And you're getting people that are FOMO buying the high. So what happens? People are FOMO buying the high, something like this, up towards the high, very high delta in this case, or continuously bidding at the high. And you're getting open interest that is increasing as well, right? So it comes to a point where the progress is stopping, but you're getting that bid still, right? So you have people that are opening positions for no result. You have this on Bybit as well. So if we go to Bybit, so this takes a second because it's on XO, you see that the OI just got, it was up there, right? The OI before some of the larger sell-offs was just under $1 billion. So this was 864 million. And you saw the entire time leading up to this, buyers were still, so if I have to zoom out more because this time setting is, it's on 30 minutes. Buyers were still getting ahead of themselves on perpetual swaps towards the top of this structure. And the bid wasn't there anymore from the spot market. So this was just an indication that when you started to see this premium, right, and you start to see this premium maintain this level of extension, there's no follow through, and you're starting to have this parabolic structure, you're at a really important level. This is a point where the market can get crowded and begin to unwind if you get any move against it. So this is something that happens, right? The market in any kind of trend is going to overheat. I said, that funding can remain positive, so we should look for signs of where it gets very positive. On the same token, whenever you have a pullback, look for it to go negative or to become a little bit, at that point, compressed or trade closer to neutral. But what we saw was, again, the institutional bid wasn't necessarily there. The New York bid wasn't there. And the futures market continuously was getting aggressive towards the top of the structure, which, again, is just a sign of a trap setting up. And you get an unwind, you get a crowded area within market structure. So this is something that's going to happen continuously, though. So we have to remember that this is just a trend that has been very strong, and it's going to get overheated from time to time. And that is something you just have to keep in mind. This is why you don't FOMO buy into resistance, especially why you don't FOMO buy into resistance with a large amount of leverage. So there's a few things to look at right now. I got exposed again for all of my spot. And whether or not this is going to be putting in another move remains to be seen, but I think right now it's starting to look like a healthy bottoming structure. So a lot of the times you will see a 3-drive structure. So this is a 3-drive structure on the 30-minute chart. I think that it would take place on something like a higher time frame, a 4-hour chart, maybe even on a daily chart. So where this might be the low, and then you end up getting another break of that low. I think that ultimately this 15.6 level is going to hold. If it doesn't, it doesn't, and then we look lower to 13.8, 13.79. So you can see specifically I have that level at 13.796, but I wouldn't hang on that, right? It's just the idea that we'd get back down to this structure. But I think that this is starting to shape up to be a decent area to look for at least temporary relief back up to 18. So I think that you're at least going to get a bounce up to that point. If you look at things like this right now, what was starting to happen was you started to have a delta divergence. So if we're looking at, this is on Bybit. So we have delta that is continuously making a low, open interest, which is starting to curl up. So it's just the beginning of a small squeeze. If you look down to lower time frames, it's a little bit more obvious. So if you look on to something like the 10-minute. So I'm getting used to using EXO again, so you have to forgive me. Okay, so this area within the structure. Okay, the trend is, in this case, still moving lower on delta, or it's just even, but you have a higher low over here. But you have open interest that has gone up for this period, spiking again, rinsing, spiking again. So it's showing you that the prevailing move into this structure towards the right side of it is aggressive selling. So you can look at BitMEX, the same thing. So BitMEX, lower low in delta from the left. So it's just an indication that there's absorption down here. Now, if we look at this local structure, in terms of the last 2 days, the setup that I think you could take, or the setups that I think you could take, which is a little late now because one of them has taken place, we are trading above the point of control for the last 2 days. So that's a good thing because you're starting to see that most of the volume is coming at the low. We're back now above the VWAP, which is a good sign. So all these are good signs because I think that you're going to get a revisit at least to, I would say at least to 17.8. I think that at least 17.8, you're going to get a good amount of relief at some point, right? Because this is starting to look like there is a decent amount of absorption at the low. You just want to pay attention to make sure that at some point you don't start to see the futures getting really ahead of themselves or getting really ahead of the spot market. Can't wait till EXO drops a desk. Yeah, I agree. I can't wait to see that as well. So the thing about EXO, they have a few of their own tools that are not available on Sierra charts. So you can see it has a net long and net short tool. And from time to time, I might refer to this. It's just a combination of looking at what you would see in delta coupled with open interest. So what you can see is right over here. So I'll move these up so you can only see these. Okay. Actually, I have to show the price chart as well, which would make it a little tough. Okay, let's see if I could get this fitting. Right. Come on. One sec, guys. Apologize for that. All right, so into this low. So what is beginning to increase? So we have delta into the low. All right, what is beginning to increase into the low? You start to have open interest increasing. Okay, and you see that if anything, we have more net short speed or an increase in net shorts that is much more drastic compared to the activity in net longs. So towards the right side, it's starting to show up. I think that you're starting to get more active bidding on swaps. So I'd be careful about buying this right away and assuming a reversal. It is starting to show. I have to see, this is a problem because I can't see. I have to scale this properly. I'm trying to make a point, but I can't fit all of these into the chart. So these tools right here are a combination of looking at open interest and delta. If I had the screen bigger right now without putting the price chart on, you could actually see how it coincides. Come on. I'm going to spend one more. Nope, it's not scaling properly. I just lost this. Hold on. Okay, if I fill sides, is that full height? I'll have to practice more with CVD just so that we could look at this better. But the net long, my point is still the same. So if you look at net longs and net shorts, it's a combination of looking at open interest and this aggressive activity at the bid and at the ask. That simple. So right now we want to continue to see signs of absorption. Remember, I don't think that it has to be that the market reverses right from here. I think that we could get a 3-drive structure into this low. So anywhere between 15.6 and this 16.4 level is game. And I think that, and I placed bids at 15.8 and 15.6. Might not get them. But I'm going to start to look for long opportunities to add at this point if we break above 17.4. So if we see right here, I'll take your chart request in a second. That long shorts thing kind of threw me off because I couldn't scale it properly. So the last 2 days, 17.4, value area high. We do have a poor low down here. So again, that would fit for that idea of spiking the low again and putting that drive into the low before reversing. But if you break above 17.4, I think that you could target at least 17.8. So 17.8, maybe 18 gets you the overthrow, but I think we're going to get that. Honestly, I think we're going to have a decent amount of relief instead of just this being a continuation pattern down. Do you ever do CVD overlay in a main chart? Okay, Kilgore, thanks for helping me out because I just started using what's it called? EXO again recently. And it's like, it's really good platform, but when you get used to moving things around on Sierra, and then you get used to, moving things around on Sierra, and then you go to EXO, it's a different, it's just a slightly different feel. So I can't just click on the right side of this and make it adjust and fit the entire screen. Like if I went onto Sierra, or, if you go onto TradingView and you double click this, it's going to scale it. So I guess EXO haven't figured it out perfectly how to do that, but in terms of doing the delta on the chart, so let's see. Overlay main chart. Is that going to show it now? Oh, right there. Never mind. Okay. Cool. CVD line. I don't need to have that probably because I already have. Okay. So now I could. What's going on with that? Is that just, do I have to get rid of the open interest now? Gotcha. Cool. All right. Yeah, that's good to know. It's still like I have to get used to this. It's like even the way I don't really like the way that this. See, I'm probably not doing something right because I want to drag that. I guess that's the way it stays. That's cool. I have to mess around with this because I feel what I'm going to be doing is I'm going to be using this a lot moving forward. And it gets frustrating. Like if you're in a so the thing is, like, we do the live streams now, and it's primarily what we're doing. The problem with live streams is like when I'm making it, let's say I was making this video on BlockRoots and we're gonna post it later. If this happened, I'd be like, fuck, gotta fix that, and then I'd have to redo that and figure out how to scale this properly so that it was set up nicely for the video. I am relearning EXO again during a live stream. Because I don't really look at the long shorts, and for you guys that followed along for a while, you know that I don't really look at the net longs and net short stuff. But on Bybit, on EXO, it does just compile off of Delta and OI. But I'm so used to just focusing on things like CVD and OI separately. If it's not broke, don't fix it kind of thing. Click on settings. Thanks, Dave. Let me say, click on settings for CVD. So I'm probably reading a late chat thing, aren't I? Because I think I already did that. Fill sides, no. Overlay, main chart, auto scale. Maybe if I CVD line, I don't know. Honestly, I'll figure all this stuff out. I'll become really familiar again with EXO before the next live stream, because again, I'm going to be using this a lot more. It has all the BitMEX stuff, and I'm really looking forward to you know the whole story why I was looking at Sierra, but now it's not going to be as relevant. But the CME is really important to look at. But it has they have a desktop client coming out, which is going to be freaking awesome, I bet. Okay. I just want to go through some of the questions, and I just want to get to I'll get to the charts that you guys want to look at in your questions. John Krugman. So with so much TWAP happening these days, how does it affect technical analysis for retail traders moving forward? So I think that one thing that you have to do. Did I miss other questions too? All right. So one thing that you have to consider is always, TWAP, the institutional bid, all of this falls into context, right? All this should inform your decision making. I think to a degree you have to take into consideration when it's present, like when the institutional bid is, when Coinbase's bid is not present on, for example, Monday morning New York Open, then that's something that's kind of obvious, right? But what you have to consider is that technical analysis, technical trading, that's a way to define your risk, right? That's a way to define, it's a very simple way to define things like market structure, to define risk. It's not a trading system. Technical analysis is not a trading system. It just tells you what is right now on a basic level. So when there's a new mania, when there's momentum in the market, you have to kind of take some TA 101 stuff. You have to, I guess, weigh them differently, because again, there's something bigger at play. So that's the best way I could put it. There's something bigger at play, and you want to be moving with the wind at your back, right? And if we see an institutional bid, if we see that there's this new presence by these larger participants, you don't want to try to fade them, that's for sure, right? But we haven't seen that really crazy spot demand yet. It is again. So this week, this is new. We've seen that for the last few weeks, but only this week did it kind of did they pull off the gas, which makes you wonder. Did some people pull off the gas for a reason? Is it because the market is a little overheated? They know that the market can kind of fall under its own weight. They don't want to be present in bidding they're sophisticated, right? If they see that certain metrics that are unique to crypto are indicating that the market is overheated, do they know, okay, at that point, we're going to step out and let this thing kind of fall under its own weight, like I just put, or as I just, the way I just put it. And when I say a market falling under its own weight, I'm just talking about, delta unwind. I've talked about that before too. You just get crowding into one area, right? The market is getting long in an area, and it, a little bit of effort in the opposite direction ends up imbalancing things. So I think that we have to look at is what the bid is going to be this Monday. So pay attention to Coinbase this Monday and see if it shows back up after a holiday, right? Okay, so let's see. Exo's desktop, I can't wait, yeah. All right, seems like OI fell off hard while price made this last move up before the reversal. Yeah, I mean, OI fell right before it because the last portion of it was a pretty decent short squeeze. So OI is going to fall during a short squeeze. So if we look at Bybit, and we'll go to the higher time frame chart, just the 30-minute chart. Let's get the delta off. OI, zoom out. And then we'll put CVD. Okay, so this is helpful actually, having the CVD overlay. So in terms of Bybit, there is a beginning of a shift in aggressive selling before the trend even, this aggressive selling, you could tell, was coming in on the way up, right? There were people that were betting against this the entire portion of the trend, right? So when you see that OI drops after the market moves up, so something like this, for example, that's just an indication of a short squeeze, right? So that's beginning to show you that the market is moving less organically in terms of actual demand than it is moving from the activity of positions being closed out, right? involuntary, right? It's like these positions had to worry about getting either liquidated or their stops being hit, and as the market moved against them, they have to close those positions out and cover, whether it's, again, they're doing it on their own or involuntarily because they're being closed out by the exchange. So when the market moves up like that, and you see that right when that happens, OI drops, that's just an indication that the move up was from a short squeeze. Okay, so why does the butane BitMEX funding indicator get so positive on the lows recently? So this is, again, this is so Andre, this is something that we've noticed for the last week, which is that funding was starting to maintain a more positive value. The premium index not really going negative on the pullbacks, which is what you want to see during pullbacks. In a continuation move, you want to see that in a pullback. So if we look at premium index, you want to see that in these moments like this, that you get this activity at least coming into the market, or at least that it's flat. If it's not flat, if it's not negative, that it's more flat. And what we're looking at is when we're, if we're looking at whether we're looking at the premium index, which is a derivative of basis, which is the difference between the spot price and the futures, or if we were looking at something like the CVD, it's showing us almost the same thing, right? You're seeing that there's aggressiveness into this low. And that's what you want to see in a trend. You want to see that as the market pulls back, that on the futures exchange, not on the spot, you want to see that spot selling subsides, right? The spot bid is strong, but the futures participants are selling against this still. So anticipating a further correction. And then when you move against them, you squeeze and you move upward, right? So you saw that over here, okay, you had that negative funding. Excuse me, it wasn't negative funding, but it was more of a negative premium index. Throughout these periods prior, it was less substantially to the upside and still negative values. The entire periods before that were mostly negative. And then as we got more towards this high, it's just been positive. So this makes sense. What have people been doing? What have you been doing? Not you as in everybody, but the majority of people have been doing towards this high have been FOMO buying, right? Buying in anticipation of a breakout, buying for the big move. And they're buying, and there's no more upside activity, there's no more result to be shown for that activity coming into the market, which is just one. I try to put it in that way because that's the simplest way to think about it. Buying activity should make the price move up, right? More buyers should mean higher prices. When you have more buyers and prices are still staying in the same area and the spot bid isn't there, it's an indication that someone is absorbing all that, or that buying activity for all of that activity that's coming into the market's not doing anything. So when everyone is positioned on one side of the boat, what happens? Okay, the boat tips. So in this case, everyone is positioned to the upside, right? There's an imbalance. What this is this, along with the fact that everyone was taking, even I was getting excited towards the high too, because you think the high's about to break. When everyone talks about something happening, everyone anticipates something happening, everyone knows that something is, they take something for granted. That means that the market is crowded based on that future occurring. So if you think that the market is, if you're thinking next week the market is going to be above the all-time high, if I tell you that, hey, next week the market's going to be above the all-time high, are you going to go sell the market or buy it? So if everyone is acting under the certainty that the market is going to be higher, then what you've done is you've pulled everyone into the long. Okay, there's really no one left to long. Everyone's known about it in advance. Everyone thinks the all-time high is coming in a few minutes, in a few hours. Everyone is getting long in that moment. It's just a perfect opportunity for the market to unwind. So it's the same way that when we're trading lower time frames, we're looking for those short-term signs of crowding, those short-term traps. This is just a sign of a long-term trap when you have, again, the funding beginning to maintain, the premium beginning to maintain a positive value where the spot is trading at a discount, when you have a positive funding. There's so many signs that the market was overheated. And again, this is stuff that we went over in the last live stream, which was why we were really cautious. I didn't sell all my spot at the high, and I said I wasn't going to do that. So I'm not sitting here like I sold. Look at me. I said that, and then I sold my spot. I didn't sell my spot at the high. I only started getting in and out more recently, and then recently I just got back in. So I haven't done anything major to change because I said I wouldn't. Right? I'm pretty much. I'm not. I think that the market can. So how do I put this? I think the market can move lower, but it can't. I don't think it's going to move lower to the degree that I'm worried about changing too much. If I change if I have to change my spot allocation, I always have to think about whether or not I'm even going to get a good fill. It's going to incur a decent amount of slippage, right? You think about things like, the more I sell that's long term, the more taxes I have to pay. So all those things come into consideration, which makes maybe just sometimes it not even be an attractive sell to me. Even if I know we're going to be, $200 lower, it's whatever. I think that we're going to be $1,000 higher 2 months from now. So these dips, and this will get to specifically, you said the dips, the funding. So the thing about the funding is, I want to use that now moving forward to see that the dip is really a good dip to buy. So that's another thing. This has had a temporary period of that basis occurring where it has been negative, but that's not just, this is an indicator, right? You don't want to just rely on the BitMEX Neo funding indicator. I want to see that there's the delta divergence. I want to see with my, with the naked eye that Coinbase is trading at a premium. So the thing about, this indicator is useful, right? But it's a BitMEX indicator, right? It's BitMEX Premium Index. So I look at this indicator because I will, before looking at it, make sure that I know that this is actually representative of what's occurred. But if I just tell you to go look at this indicator, a month from now, this might not be relevant anymore. If I'm looking at it right now and I'm talking about it, it's because I actually already know up to this point what the relationship has been between the spot market and the futures market. And I could say confidently, okay, yeah, so this period was a period where we did see aggressiveness into the low and the futures were leading it, right? And sure enough, over into this low, what did we see? We saw a delta divergence. So we see that this is flatter now. That's good. You don't want to see in a pullback that perps are leading the way. It doesn't usually happen that people get rewarded with futures that simply, right? You don't get to have increased exposure and to just walk into the dip a lot of times. The market usually likes to penalize those positions. All right, so TradingView Pro account, I think I do. I have to go through I think I re-upped my TradingView subscription. So I usually have a pretty nice deal with them. So I have to check because since I lost my wallet, I have to go through all the things that I had payment rails hooked up to. I think I had a free TradingView account though through my buddy David Bell. I can't be certain. Half the time I don't even look at my bank account, so I don't know what's coming out of it for like these subscriptions. Not to say I don't look at my bank account. I think you guys get the idea. But I don't know if I have a TradingView Pro account. I think it's half off. I don't have the data feeds on here anymore, so I don't have the ES. I could tell that hasn't been updated because I've delayed ES, but I have my updated ES on I have my updated ES on Sierra charts. So this is going to take a second to load. But so I already have that with Sierra. I already have CME integration with that. Okay. I'm just going through the other questions and I'll take all your charts, guys. So always wondered if Bitcoin price is manipulated by a group of people or a state party. So Nelor, I think that crypto is definitely a market that can be manipulated because there's not really as much barrier to entry, and there's also not nearly as many KYC, AML standards as there are in traditional markets. But there's really no way. I would say that there's definitely a certain amount of manipulation in this market. I don't know if it's by a major state party though. So I don't want to go down that route. This dump is linked to PayPal news. No, I don't think so. Has an OI legend under settings. Okay, good to know. Yeah, no, I know that, Matt. So as OI lowers drastically, this typically means top or bottom is in. Yeah, so the one thing that people have talked about is looking for the flush in OI. I would want to see that, the problem is, so let's just clarify, most of this move has been driven by spot. So, if you're looking at previous OI levels to make judgment off of where we are now, I don't think it's the best thing to do because previous OI levels that might have served as, a barometer to use for highs and lows or a benchmark to use, they might not be as useful now because the market hasn't been led by swaps. We haven't seen a crazy amount of crowding in futures. So who knows what value to really look to moving forward if we're going to see that the market is going to continuously move on into a new bull market. Because we don't have an idea, I think, of level of extension that I guess is good to use as a, as something to anchor to. This is my dilemma. I've been holding for spot for a long time. Yeah, I do sell spot. Record, I at times I hedge spot with futures. At times I de-risk a certain amount of spot. Do I ever sell all of my spot? No way. Okay. But when PA is consolidating while OI is increasing, there's typically more probability that price action is not organic. Yeah, so that's right, Ibrahim. So that's one of the things that confirms these setups with CVD, just as an example, or setups with funding, is that you want to see, like, let's say that price moves up towards a high, consolidates for a week, doesn't really make any new highs, doesn't make any new lows, it's ranging. If we see during that period that CVD has been generally upward, right, or delta has been very aggressive towards the highs, most of the volume is at the highs. If we see that that is the case and OI has been increasing, we could build a case for, look at something like funding as well, premium index being very positive. You could start to really build a strong case for a big unwind of this because people are getting into position here for no results, and when you have the market move against them, it's just going to force them to close their positions out. So you have big moves in the opposite direction. No, I haven't thought about being a professor. No, I trade for a living. Okay. Do you see the story about Chinese police seizing? Yeah, but that's old. So that story is, that's a story that's likely already been realized already. And, the idea that Chinese police are going to seize all of this crypto, so there's like a lot of other crypto too, and then sell it OTC, as if the counterparty wants half of this shit, besides BTC and ETH. Think you're going to find a lot of one-sided deals. But yeah, I wouldn't buy too much into the FUD. So here's the thing, guys. In a bull market, the pullbacks are always going to be accompanied by FUD. That's the way the news cycle works. The highs are going to be accompanied by, the stories that, so media needs to be front and center. They need to sell. I want likes for YouTube because I want us to be prioritized by the algo. A media company knows that the hot story is going to sell is the current energy that is felt within a market. So if it's the market moving up, all of the positive stories are shared. The market has one pullback and it's all the negative stories that are shared. So that's just the news cycle and the market cycle. So in pullbacks, you won't find likely if you have a big pullback of over 10%, there's probably always going to be a news story that is like some horrible news story. So yeah, I don't really think about them. If you see it and then there's no immediate response after that, I think it's not a headline risk. Because the market already is deciding how important that is. Okay, that screen you have quick relevance of colors with blocks on. What about it, Mark? That's a footprint. How do you trigger low time frame trade based on footprint? Okay, Antoine, good question. No, I don't think Bitcoin is forming a huge Adam and Eve pattern. I think what it could be forming is maybe a big cup and handle, right? Let's see. You said a huge Adam and Eve pattern. So is your Adam and Eve pattern this? Which is kind of like a cup and handle. Are you talking about... No. What are you looking at? This? You think that that's an Adam... You think you're going to get that? Oh. Yes, drama sells, D. That's the thing. And whatever the current drama is, one media company all the media companies kind of have to follow each other, right? All the eyes are going to that story. When there's something negative, they all publish negative shit. When there's something positive, it's all, rainbows and sunshine. Adam and Eve pattern, something like that? No. Be careful with looking too much into patterns, guys. I was going to say the cup and handle pattern, which David Bell mentioned, right? And you get this a lot of the times with traditional assets on the higher time frame, where you have a all-time high put in for years, price revisits it, and that area acts as resistance and leaves you with something like this, where it's a cup and handle. So this is the cup, it's like a coffee cup, and this is the handle. So you could very well get a cup and handle, right? But I don't rely on just that pattern. But that's what it could end up looking like. That's the thing. Patterns are only verified after they've happened. So the cup is only a cup after we've already broken it, right? Then it's, oh my God, it's a cup and handle pattern. Well, then it's like, oh yeah, it already broke resistance. That's no longer resistance. It's clearly a buy. All right. Have you written any books on trading? No. I hate writing. I used to like writing, but I hate writing now. I just, when you stop doing something long enough, you just don't become, you're not as proficient in it anymore. And I think that's why, partially why I don't enjoy it as much anymore, because I only realize my shortcomings with writing lately, because I'm forced to write. I'm not forced to write, but I have to write some things each week. And every time I'm writing, it's like it's feedback that I'm not as good of a writer as I used to be. If it bleeds, it leads. If it burns, it earns. Nice. I like that. Okay, so yeah, let's take a look at some charts. So I just want to cover the basic points, guys. The market is getting overheated. The certain things that so you pay attention to patterns, right? It doesn't have to be a pattern in structure, though. It doesn't have to be a cup and handle, a flag, patterns of behavior, patterns of reoccurrence, right? So the pattern for the last few weeks has been a spot bid. This has been something that has turned on New York open time, and that pattern ceased to exist this week. Okay, that's one piece of evidence. Okay, so now we don't have the spot bid, but now we have still a ton of aggressiveness in the futures market. Continue to use this moving forward. These are the finer details that you have to pay attention to. So one of the reasons why we got, I didn't want to say bearish last week because I didn't want to suddenly become bearish, but we became cautious on the last live stream, was because, again, things were getting a little bit overheated. So these are the patterns you have to pay attention to when there's a big spread between the spot and the futures market. That pattern in the past has led to, major moves where there's been a correction. All right. When everyone knows something, when everyone is certain that something is going to exist, it's probably not going to happen, right? As quickly as you think it is, at least. It's the same thing as, for you to sort of conceptualize why the idea of everyone feeling like something is along makes it no longer along. I don't have to know what your exchange says, right? I don't have to see your exchange page to know what your positioning is if we have a conversation for like 20 minutes. If I'm with you and I say, and you're telling me, oh, I'm so bullish on Bitcoin. Oh my God, Bitcoin is going to be at the all-time high next month, and I thought it was going to be an all-time high this week the way it felt, which is not something you bet the farm on anyway, but it's just a feeling, right? We all have feelings. It doesn't make us a bad trader. But if you're telling me, I think Bitcoin is going to break the all-time high next week, are the odds in my favor that I can assume that you have a long position open? Yeah. So now extend that to a mass of people. Everyone thinks that Bitcoin is going to break the all-time high in a matter of minutes, right? A matter of hours, a matter of weeks or a week. It felt very short term. I was captivated in that moment. So when everyone thinks that, and that is going to occur in a matter of a very short time, you know that everyone is long. Okay, so the market is going to punish those participants. Okay, it's going to inflict the most amount of pain, which in that case was moving down. So, all right. So now we have that. So let's take some charts. Let's take some charts, guys. So if you guys want to share some charts, feel free to share some charts. I see there's something this morning. Someone posted this talking about this monthly wick. So keep things in perspective too. This monthly wick, after we've had monthly wicks like this, we've never gone on to continue in the short term. We've always had a big pullback because, again, you have a big monthly wick here. They're looking at this big monthly wick here. Well, you could say that, but monthly close is kind of arbitrary, right? This is just a matter of us having a 24/7 market. That, and at that point, if you're saying that this is something that always yields to downside, well, in this small sample, if you're going to use that as a frame of reference, what about the fact that, this is the highest monthly close? Which one do you prioritize at this point? So just important to keep context in mind, because something like that, it's kind of a weak argument if you're going to use that to be bearish, right? It's like in this sample size, yeah, because we've had consolidations and big pullbacks, but it's not because of that, right? It's because the market is crowded in this area. It's not because, we could act with that level of certainty. All right, so let's see. So chain link, of course. M down on the monthly. I don't know what M down means. So link is, alts are experiencing a substantial pullback. Now, one thing about alts is you have to do, I think that this is way more actionable with alts because there's a lot more animal spirits that are taking place in alts than there are in Bitcoin. I think that there's more of a retail presence in alts. So with alts, you just have to pay attention to when they're getting overheated. And if Bitcoin looks like it's getting overheated and alts have been overheated, they're really going to get punished. So the funding on alts was kind of ridiculous. Kind of ridiculous up until this point. Now, where Litecoin, where we are right now, so I still have my levels marked, is we're back below a pretty important level that we put in on the way up, right? So this 10 level was important, this 15 level I said was important, and more recently that 1281 level. So that should act as support. So this doesn't mean that we lost it. I just wouldn't want to take any longs until we were back above there. So with Link, I don't necessarily know if I would want to take any longs yet. I would really want to have a good amount of certainty, and it's hard to say certainty, but I would want to be really confident in BTC before getting into Link. Just because at this point you've lost market structure. It's starting to really prioritize the bearish side of things. The range hasn't held up. It was resistance a couple times, enough to where, of course, everything kind of overextended to the downside. So again, for me, just to simplify, 1281 and we're good again. Otherwise, I would want to see what type of structure builds within here. The same thing with BTC though. You might get that sort of 3-drive pattern with Link as well. And this might be the first drive though, right? Not looking at the low time frame drive right here. I'm looking at 3 drives on something like, an hourly chart where you have a larger structure that has been put in. And then if you're back above 1281, well then sure. I would just be careful with it though. Stake. Yeah, of course I can take a look at everything. Stake is not really listed on much, huh? Okay, so actually, this it looks like it experienced the same sort of ass kick and everything else did within the last 2 days. But this chart, I don't really know much about this chart. But if I'm looking at this just with my criteria that I would extend towards any chart, just to get an idea of where the important weekly structure was. So it's the same daily levels, going back to prior daily level. Okay, so here are this is your weekly. This is your weekly line right here. Very minor support and resistance flip right here, but this 1267 level, sorry, itchy nose always. This 1267 level right here, I think is it's a pretty good looking chart. That's why I don't have anything bad to say about this chart. It's actually holding up pretty well. I don't know anything about it though, but it's holding up pretty well. This is a pretty nice recovery. It's not like it's, if we look at Stake and you look at Link, off of let's look from high to low, from high to rather where we currently are. So no, we'll go from high to low. Let's see the kind of, so 30% off the highs with that. Stake was down, that's 31. Maybe it's just the fact that this chart is a little bit compressed. Yeah, well I can see now, that put in a pretty extensive wick. But from where we are from an open to close standpoint, not too bad. Right? Yeah, I mean, Link has obviously had a lot more conviction to the downside than Stake. This is actually not a bad looking chart, I gotta be honest with you. Local structure, you obviously want to see the local structure is reclaimed, so you're starting to have that maybe over here, but this is not the first time, right? This made a move up, and now this is the retest. So yeah, this would be your level you want to see hold. If that didn't hold though, I would still keep this chart on the side, because it could be shaping up to be a really good play where you're getting something setting up that is still kind of intent on making a move up above 1267 and then back towards the underside of this higher time frame structure. Not a bad chart. Don't know anything about it. Kind of surprised because it's actually a decent looking chart. All right. Okay, ADA. So let's look at ADA. Big move with ADA, huh? XRP2. Weekly levels. Just get that weekly high too. I just want to know where the weekly extremes and important levels were. So I mean, you get the idea though. These are right back down into your daily structure. There's no magic about this, guys. It's just making it easy for me to see sort of the you shall not pass levels that have stood. This right now, you know, this is kind of hanging in the middle of nowhere for me. It is respecting a previous small consolidation pullback in this bigger move up. But a lot of times, I mean, just being honest, this, you know, alts tend to come all the way back down. You know, whether if you're thinking this level is going to hold, I think that there's just a low probability that that holds. So I think that this is a big squeeze upward, but a lot of time alts come back down to where they left. And, you know, ADA, I think it's kind of riding on the whole trend of the market moving upward, and it's a little late because it didn't put in an earlier move with everything else. But this is your, I think your 11 cent, sort of 12 cent area. I think it's going to get revisited. You might get relief though, right? So this might lead to a short-term relief. In the short term, if you're back above 14, so if we're able to close above this level, right above these highs. So if we go to the daily, more recent 4-hour chart, then you're probably revisiting right around 15.5, but I can't really say much more than that because you know, I feel like something, you know, if I'm just being honest, I feel like some things are moving late. Did move early and they finally started pumping, but I think a lot of things just pumped and will pump once and then fully retrace. All right, so got to run EOS. Let's take a look at EOS. EOS versus BTC also. It's always good to know a relative strength. Not a very good looking chart. Ugly chart versus BTC. Ugly chart versus USC. This is what I'm talking about. You know, whenever you guys ask me about a chart, I know you guys are probably, you have a vested interest in it, you have a position in it. So I always feel bad about being like really frank and really honest. But I think a lot of things. So here's my opinion on things. If something, so when you have these major these cycles where everything pumps, there is this pattern that, you know, one subset pumps and there's pairs that are correlated to those pairs, and then they have a slightly weaker pump, and then over time things will continue to pump less and less, and you're betting on that just kind of going through the entire depth of assets equally, when that's not the case. When a lot of time, if something's late to pump, it's probably for a good reason. It's being forced, right? It's people like forcing the pump by assuming that the pump is going to continue to come. And the truth is, if you didn't get in early, you don't get rewarded, right? If you're not in the first assets, you get rewarded less and less. So it is nice to know those immediate correlations. So like the Wi-Fi, YFL, right? Wi-Fi, double I, the major blue chip DeFi correlations. But then as you extend this out, there is a major crypto correlation that when the market is moving up, right, everything tends to have a good amount of relief, right? Now, how long that lasts is something that is different from one asset to the next. The danger is getting in the pair that is last to move, and this happened with Comp, this happened with Uni, because it might be that it's not going to move, and the move might have already attempted to take place, but it's just a little too late in the cycle at this point. We're already going into maybe a larger correction with BTC. So you have to know where you sit within that, you know, game of, it's like a game of, what's that game when you run around, that musical chairs game, right? When the music stops, are you going to have a chair to sit on? So EOS, I think the same thing is going to happen with XRP. Everyone's getting really confident in XRP. I think XRP, EOS, a lot of the older pairs that are, I don't want to say they're insignificant, but they haven't been performing well, right? I think that they're going to retrace most of their pumps. And you really will rely on new retail to bring those up again, because otherwise, if everyone's been around, they know the game, right? They're not going to fall for the same tricks. ZIL. ZIL, okay. So ZIL is like another pair, right? These are all the older pairs that used to be the more popular pairs, and I think they got their pump a little too late. They're not the new flavor of DeFi, right? They didn't pivot and change their approach to be a DeFi cryptocurrency, a DeFi white paper, and modify it. So I think that, I don't think that the future is positive for these without a major rush of retail on an exchange that offers these with a fiat pair. So if I look at ZIL right now, this is a higher time frame structure that we've been ranging in, that we've ranged within prior. I think that ultimately it's great that you left this range down here, but what is the likely thing to occur with ZIL? It probably comes down to test this 2 cent level, right? And I would say it comes back down to the lows, honestly. And if you want a positive case for ZIL, well, at least it needs to retake this high, right? That was the last area of resistance after this move down. It's already kind of failing to maintain these lows. So you just want to you don't want to see that it violates the previous structures that it flipped on the way up. So even if you say this is the range on the high time frame, and this is sort of your mid, we'll put on the volume profile. Okay, so this is sort of the midpoint of the structure. Point of control is down to low, but you don't want to see that, at least you definitely don't want to see it loses the mid, right? And so this should act as support, but does it act as support and you get an immediate response because everyone is interested in this, or was this a squeeze upward because it was the end of one of the last ones to move? So I don't know. I like DOT 2030. But I don't know if it's a successor for it. C3 compounder, please. See, is that a DeFi pair, Comienda? Is that going to pop up here, or do I have to look at some? No, there we go. So this is against ETH. Well, it's certainly underperforming ETH. And, it's certainly underperforming ETH. Let me look at ChartX so we could see some USD chart. CP3. I mean, you could say that it's at support. Do you think that this is going to hold? Do you think that it offers maybe a small bounce and then this is going to... So guys, how many times have you seen these patterns before? This is a new pair, right? These patterns right here, there's nothing special about them. The reason why they're all the same is because the people that are acting on behalf of them haven't changed in thousands of years, right? And the people that are buying these things were the same people that were buying ICOs and IEOs. That's why the patterns look the same. The failure patterns, the patterns of charts that do not continue to make new highs until something major changes, right? This chart completely retraced multiple times. And you've seen this pattern before, and then this just goes on to bounce all the way down. So I don't know what this is, but you need a lot of strong reasoning to get into this. AMD, I played the return to VWAP on the 24th, and I'm looking at the gap of 90. My question is, I'm not a versed trader. Are gaps meme in traditional markets? Well, there's different types of gaps. There's breakaway gaps. There's gaps between market open and market close. Overnight gaps. What kind of gap? So AMD, you said, right? AMD is not a large cap. That's right. Okay. So you played the return to VWAP. Which VWAP, though? Because the VWAP, if you're looking at equities, the daily VWAP is not what I would make higher time frame decisions off of. Gap at 90. Where are we looking? Oh, right here. You're looking at that. Yeah, the fill the gaps thing is a popular thing in traditional markets as well, but is it completely necessary? No, it's not completely necessary. I don't think it's causal in that sense. But hey, that's not I don't think that that's required in this for this chart. This chart actually looks, over the last few months, clearly in a pretty strong uptrend. This consolidation reminds me of Tesla. So see this consolidation right here on the daily? Let's go to Tesla and look at Tesla I gotta log this 1 sec. I think that you get, well, it's the same with Tesla now in the low time frame, but I think with Tesla and AMD, being that they're tech, and Tesla, oh, I'm looking at Tesla right now. I'm thinking I switched back to AMD. Excuse me. 1 sec. These patterns like that, come on. Oh, I gotta type it. 1 sec. I'm talking before I'm typing. So something like this, there's a high probability that this breaks upward. So I don't think you have to worry too much about the gap being the catalyst for that. You know, and it's not like that. It's just not the thing I would really put too much of my focus on. You could look at something like whether or not the gap fills after, you know, the first hour of trading, if this is an overnight gap, right? But this is not. This is going back to September. What was that? September 2nd. So it's not the same. Or if, you know, you have a gap overnight, a gap up, and you see that immediately the market has filled the gap and then is complete, and then is, so let's say that you have you know, you're looking at a stock and you have an overnight gap right here. All right, let's say the market gapped down. All right, so the market gapped down overnight, and you see that the market has continued down, now covered this gap, and then is now below the day's open. Well, then I would say I'd probably play that as continuation for the day. Not play it as continuation, but look for the short side of things, versus have a market that has gapped up. So market opens higher, fills this gap, and now I'm looking for the long side of things if the market fills the gap and then breaks above the day's open. So you could use gaps to build certain systems and approaches, but this is kind of far back gap. I would just look at this as a longer play. Yeah. Any advice or recommendations, Christy? Let's see. You want to invest in crypto and stocks? It's tough. I don't want to say go watch YouTube. Yeah, you know, I would pick up some basic books on investing and trading first. So I would pick up, if you want to learn how to invest, I would pick up The Intelligent Investor by Benjamin Graham. Yeah, I would pick up that first. And then pick up maybe Pioneering Portfolio Management. There's so many books, honestly. Christy, what I would just say is, before you get into buying anything and signing up for anything, go to school. That's what it is. Go to school. Take a literature approach first. Prioritize literature and learning as much as possible before you buy anything. As far as how to learn further, and advice or recommendations for any specific things I can't give you, so I'm not really sure where to take that. AXS. We just dumped and pumped $3 in 1 second. Comments. I wasn't paying attention. Wow. 1 second? I don't know, man. That seems a little bit longer than 1 second. But again, you know, this is you were starting to see absorption into this low, but the case that, remember I said that I was looking for a 3 drive into the low, but it's not this 3 drive. I think that, again, I said, I think I also said, I'm trying to remember what I said so that I could leave you guys with some level of, I'm not telling you to, I'm telling you where I'm looking to buy, right? So I have bids from 15.8, I think 15.896 actually, and 15.6. So I think that this is a 3 drive initially that you get that can give you a long opportunity. I think that we're starting to see signs of absorption over here. I don't necessarily know if the turn is right here, though. I think a lot of times when you get a pattern like this start to show up, you get people that act on that immediately, and they get punished, right? You're going to rinse both sides for a little bit. It's never going to be that easy. So I think that this ultimately turns into a larger bottoming structure. And I would hope that it comes down to 15.6, but you could come a little bit deeper. It could come all the way back down to, you know, this 15.6 level right here is previous high up here. But I think that it's beginning. I think that the signs are starting to show up. So I wouldn't take what I'm saying, you know, about the shorts getting caught off sides over here and extrapolate on that as if this is just going to move like that. You need, again, before any kind of big move, I need to see a lot more evidence. Otherwise, I'm taking intraday trades. So I would take a setup like this. So break into the low, reclaim this low right over here. All right, reclaim the value area low. I would take a long setup if it bases above 17.4. All right. Few setups on the lower time frames that I would take, but I wouldn't go about. I'm not trying to fill a big swing position right here off of just the things that I've went over. They're starting to show up, but I think you have to have them progress for some time. Okay. What do you think the older altcoins like XRP, XLM? I don't think so. I think that we saw them last to move. I think there are people who are shorting them because Bitcoin's, if you look at Bitcoin and you look at XRP, I think these are last to move. I don't think that I don't think a lot of the bigger, older pairs are going to, I don't know. I'm not confident in it. I think that they moved a little bit too late. I think that DeFi is the future for crypto. Because these have already been refuted so many times by people that know what they're talking about with regard to fundamentals. I don't think XRP is going to be the future of finance. I think that it could pump with new retail coming in. I don't know, though, if it's going to put in an all-time high again. I wouldn't hang my hat on that. No, it's okay, Yusuf. I'm not 100% certain. I don't know. We'll play it as we go. I have to be very cautious with these. So, for example, if I'm looking at XRP right now and the levels that are most important, on the way down, they were the swing lows and weekly structure. All right, so starting to reclaim a prior swing low, you gotta plan. You have a case to be made for a move upward. So now, where would I want support to be built? Well, I definitely would want it to be built somewhere between 33 and 27. 27 back above this major weekly low that was respected for almost a year, and then 33 from the more recent high. Best case scenario is holding a prior high put in all the way back here. I wouldn't bet on that happening though with XRP, right? This is a big squeeze. So I actually think that this just comes all the way back down here. What's the price level BTC hold to avoid a long-term downtrend? So there's a few things. These are good questions. I'll get to the footprint. Antoine, I'll get to the footprint thing in a second. Let's see. What's the price for BTC to hold? So it's a trending market right now. I don't think that you could give too much weight to any levels that are local. So in terms of the trend, high, higher, low. So technically, it could come all the way back down here, right? Technically, market structure standpoint, it wouldn't be that crazy. It'd actually be the norm for it to come all the way back down to a previous level. It's done it almost every other time. Now, if it breaks the all-time high, that's when it becomes a little bit less certain to me whether or not it puts in a big retrace. It could just retest the all-time high for all I know. But if it continues to move down, if it came down to this high down here, 12, I wouldn't be scary whatsoever. I think that a combination of something like your 20 period on your weekly, which is right now at 12,337, this high, you wouldn't want to see that the trending market at this point spends time below the 20 period on the weekly. Okay, so that's just a really strong moving average for trending markets and for this market too, because in the past we've maintained it the entire bull leg up. It would make sense, not just because it's like, oh, I think it's cool, right? This is the one I'm going to hang my hat on because historically that was the case. It would make sense that if a trend is going to continue and it's really strong and there's a lot of demand, that these higher time frame levels have a systematic bid associated with them. So if I'm a CTA or a trend follower, or I'm a portfolio manager, a big asset manager, and I don't want to buy BTC right here, I'm definitely going to be stepping in if we come down to the 20 period moving average. And if it doesn't happen, that would be a little bit concerning. So I think a combination of, let's say we're not worried all the way down to 12.3. So we're not worried at that point. We could get all the way down to 11.9, I would say even, because you could wick into this high, still be around that moving average. Okay, so that's if things stayed right where they currently are. If we move sideways a little bit, the moving average is going to come up because it's an average of those prices, so it'll meet price. So you would want to see that the bid actually maintained, I think, at an important systematic level. Okay. So, all right. So yes, when Bitcoin moves down, all correlations go to 1, pretty much. The things that don't, that's a good thing to pay attention to. Those are the strong pairs. sharing your entry and exit from yesterday's big 1 BTC trade. Those were a combination of trades. So there was about, I would say I probably took 8 different trades to make that. And yeah, they were big trades per trade, but it was just a combination of, let's go to BTC. It was a really big short. So it was a short from all the way up. So I can't go into it now because I'm off my VPN and that was on Bybit. It was a combination of a short from all the way up here down to most of this leg. So for that, I closed out, and I shared this. This is all public. It's on. I actually can share CoinMarketMan because that's connected to my Bybit. That was 0.4 BTC in that short alone. And then I took a long off of here for 0.10 BTC. I took 2 more shorts, and I had a bunch of longs that I scratched. So a total of around 0.8 BTC. But I was just playing this. This was yesterday morning. I was just playing this because there was a ton of volatility. And I didn't hang on to things that I could have definitely. So I think it was right over here. Yeah, I think it was right over here. I could have definitely hang on. It was over here because this is the fucking one that came all the way up. Excuse me. I was long right into this low. And I think I took profit on this one. And I shared, this was one of the trades that I shared on Twitter. I didn't want to share too many of them and look like a jerk. But because I normally don't share my P&L too much, or how much, or the trade sizes that I use, unless we're using a Phemex, or we're using it for a, an educational purpose, and I'm not trying to like give the wrong impression. But I got in a long over here. I think it was at this. It was either from 6.7 to 6.9, or from 6. This was maybe 6.2 to 6.4. It was a $200 trade. I remember thinking, like, I should just walk away and help my wife for a few more minutes and come back to this. It's going to be higher. I could have made the 0.1 BT. I could have made the that I made 0.1 BTC. I could have made the whole fucking Bitcoin off of those 2 trades if I just did that. All right, so let's take a look at the footprint. Let's look at a footprint on XO since we're going to be using it more frequently moving forward. Why isn't my speed keys working? One sec. All right, so as far as the footprint goes, there's different settings that I look at. If I'm looking at a higher time frame footprint, it is nice to see when I'm also looking at other things as well, such as basis, such as funding, knowing the important level to begin with. It is nice to see that most of the activity is, if I'm looking for a long, if we have a ton of aggressiveness towards the low, but I'm probably looking at CVD at that point, so the footprint to me is not as relevant. The one thing that the footprint does is it puts an exact value to it. So if I'm looking at a CVD and I see, and let's just imagine this is a higher time frame chart. It doesn't matter. All charts are fractal in the sense that you wouldn't know if you're looking at a 4-hour chart right now or a 4-second chart. All right, if you didn't have the scales and the time. So if this was a higher time frame chart, it is nice to see that at a level you had something like this, right? A ton of aggressiveness into the low. If I'm looking at CVD, I could see a divergence, but I don't see the exact amount. I could look at OI, right? I could look at open interest and see how much it rose during that period of absorption. But I look at the footprint to see that there was a material amount of people through a level, and then the level was traded back above. So if we're looking for a long. When I'm looking at lower time frame setups, I am using more often than not a volatility or volume-based periodicity. So I'm not using a time-based chart, I'm using a tick chart. So this is a 32-20 chart. So this chart is only going to print candles that result in new ranges. So if the chart's moving within a small period, it's not going to print a candle, so it makes the chart a lot less noisy, which makes the structure really clean to go off of. So the best setups from this are when you have a move. So let's say, for example, we're focusing on this. When you have a move like right here, where you have a aggressive move into the low, so for this period, and right now we're just focusing on, this is kind of arbitrary because we're not looking at a previous level. But if, let's say, for example, we're focusing on this entire rotation, we're looking for a pullback, where would we have a sign of a pullback? Well, we would need to see that price is beginning to base out, right? So you have an aggressive move into the low, into this move right here. The candle closes green, but you have most of the volume in this candle below the low. All right, so most of the aggressive activity is below the low down here. So that is potentially setting up with something, right? So we have this blocked off, Okay, so we could get something where we trade higher than that and you get a quick unwind of that. There's not a lot of volume down there, so it's kind of a weak case. But something like this is a setup that stands out. So you get a good move into the low, right? We know that back here, back to the left, that was a prior area within structure. Again, we zoom out. We're looking for a pullback after this move up. You have these rotations that have similar size. So you're looking for a pullback. Okay, you have a move into the low. All right, let me change that ink. That won't work. You have a move into the low. This is occurring on increasing volume. You get a base, green candle. All right, sign of maybe a temporary trap. Now price is range bound, right? So price is kind of range bound. This is a tick chart though. So this is not just price moving sideways. It makes an attempt to move up, it reverses. It makes an attempt to move down, it reverses. So we have now at the low a substantial amount of volume that's trapped below this low, and you have in this period you have two candles that closed in the green for most of the volume being trapped at the low. So this gives you a setup. This is a setup where you have trap sellers at the low, and what I would say is you start to trade higher outside of here, so you break this range. So if we break this structure, right, and you see aggressiveness outside of that, that's something that I might look to get involved in very quickly for a short-term trade, right? Just to squeeze the opposite side of this volume, or to take the opposite side of where most of this volume came in. Now, this is just looking on the low time frame. It's not like we knew that this was a real setup. Right? We're just using this as a quick example. But the trades are taken off of that sort of premise that you're looking for, in advance, right? We know in advance a level to pay attention to. This is a good setup right here. So we know in advance a level to pay attention to. So here is a good setup. Okay, so we have, make sure I have the right tool on right now. Okay, now these are for short-term setups, remember. So short-term moves. So doesn't matter if this is on a trend reversal chart or on whatever chart you're looking at, you have a prior level in advance. So whether it's we're looking at a TPO chart or a support and resistance, a weekly level, just follow along. It's not the chart that we're focusing on, it's the idea. So, well, it is the chart, but it's the idea of having a level in advance that we're looking to. So we have a level in advance that we're looking to, right there. So let me mark that off. How do we mark that? So that high, trying to make sure that lines up. I think I double click on this. There we go. Okay, so now we'll zoom in. So we get the pullback. Now we have a reversal bar, so this is now, it is actually building a range, but it's a reversal bar, so it's not like price is just stuck within here. This is where that 2A activity is coming in and there's no side winning. So now price breaks down. Upon breaking down, we have this aggressive activity caught below the low, and after breaking this low, so you have something like this, price is doing this. It's sort of like this swing failure pattern, but now we know that there's a good amount of volume into that low to substantiate a case moving in the opposite direction. So to say that this right here is trapped, and now we're looking for initiative activity outside of this level. And these are for short-term trades, but you could apply this on to a 5-minute chart. You could apply it onto a 15-minute chart. I'm just trying to build a, I guess, the idea of how we use this from a very I don't know, not very specific. We're not getting into maybe the nitty-gritty that you go into when you're on the course, but you're looking for trap setups. You're looking for initiative activity, trapped activity. The footprint just gives you an idea of where the activity specifically came in. Now, there's a whole lot of other things that, and this is, again, I asked in the beginning where everyone is with experience level. So a lot of other things you could look at when you're looking at footprint charts and things like non-time-based periodicities. You could look, for example, within each rotation, right? If we're looking at this rotation to this rotation, or let's say we have equal size rotations. So imagine we're focusing on just these periods, right? So these rotations, rotation, rotation, rotation. So if these charts are not based on time, we could actually gain a good amount of insight to know for this period and this period and this period how long it took for each of these to reach the high. Okay, what happens if we have a case where you have a move that covered this, let's say, $100 range in 5 minutes. The next one covered it in 15 minutes, and then this one covered it in a half an hour. All right, so maybe it's a case at that point that, or maybe in this case, you're covering half of that in double the amount of time it took to cover both of these prior. So you could gauge a lot from changing around these settings and using non-time-based periodicities, but I'm not going to go into the complex stuff on the public YouTube stream. Okay. All right. If I buy Bitcoin when it depreciates by 1,500, 2,000, and sell when it returns the initial amount, is that okay? Yeah, I don't know. I wouldn't mess too much. I wouldn't mess around too much, Christy. If you're saying you're a beginner and you're trying to be, if you're trying to like have fancy footwork as a beginner, I would say buying and holding until you actually know what you're doing. Please check 1 second Binance chart. That usually follows. Oh, Binance? I don't know. Maybe Binance's liquidity is crazy. Fat finger probably. Someone fat finger sell. So let's look at Binance. Binance futures. Oh, now it's pausing. Yeah, I guess it's Binance Spot. I'm not going to go on a... I'm not... Yeah, I know. I'm not going to... Dem. So Dem is one of BlockRoots members who's been really using this sort of approach as of the last, more recently, and he's finding success with it. So I don't want to go too much into it. It's a lot of discretion, but it's not something you're just going to cover on a YouTube. Put it that way, Antoine. The last high mousetrap. So we're looking at this right here. Oh, so this is good right here that's taking place. You get an aggressive move up. You see that there's nothing at the bid at the high. Most of the volume is taking place right here. So you want to see that this holds. Well, now if it's trading back above, it's invalidated. But is it this the recent high you're talking about? Or no, I'm looking at the wrong one. Either way, a lot of highs are going to look like this anyway. Oh, this is attractive, yeah. Okay, so this is good because we have multiple highs right here. And again, non-time-based chart, all of this activity right into the high, all of this buying above that's unable to close further up, and now price reverses and you just see it unwind in the opposite direction. No, I don't need tips, Comienda. I appreciate it though. Don't worry about it. No tips necessary. But it's 2 hours into this, guys. I think we're gonna wrap it up, but we're gonna do the giveaway now. So hopefully all of you guys have participated. Let's see. Okay, I'm gonna find the link. I am freaking shot after yesterday. All right, so we're going to pick a winner now for, I would say to take the Bitcoin, honestly, guys. I would say to take the Bitcoin. All right. No, I didn't even recycle it yet. I mean, I didn't even, I had a previous link to test a link before, so it pulled up someone's name that wasn't even part of this. All right, so we're going to draw. We're going to check this link. You guys have already, has everyone already went on to that post? I said before, so I'm going to pull it now. Ready? Ready? Here we go. Draw. Come on, what's going on? Pick a winner from retweets. Oh, it picked it that fast. Oh, I thought, wait a second. Okay. I didn't realize that it came up that fast. I thought I had to pick a draw. So, oh, wait a second. No, because this is the same name. So this is, I used a link, before to test this out. So we got to pick the actual winner now from this link. Okay, I didn't see that. So another winner. Here we go. What's going on? Why isn't this? We got to figure this out. All right, so is it not going to let me pick now that I, what the fuck? Tried it out before for somebody? Another winner, yeah. Try the demo. How about that? Yes, let's import a contest. Check a draw. All right, import an existing contest, retrieve. No, what's going on? Create a contest. All right, create contest. Okay. Source, Twitter. Okay, main publication. Oh no, you gotta see. Oh, that's so annoying. I gotta figure out how to pick a Twitter retweet winner. Retweet picker. Here we go. Good point. Retweet picker. Okay, authorize app. All right, here we go. Sorry, guys. Okay. No, I want to start now. Come on. All right, so I'm going to do that thing in another browser like you said. Tweet draw. Copy. Incognito. Here we go. But I think that it's going to log in with Twitter. No, I've already logged in with this. My Twitter is Cantor & Clark. I've already logged in with this, so I got to figure this out. How it works. Start now. Retweet picker. Please purchase premium to continue selecting winners. How about you just let me select one winner? Tweets. View on Twitter. No. No. Does anyone else have a better way to do this right now? Because I didn't realize that other one was going to let me. There's got to be a different one, right? Retweet picker, retweet pick. Let's see. Enter your tweet link. There we go. All right. Here we go. No, so I got to. All right, we figured it out. Sorry about that. Copy link. Paste link. Okay, number of winners. 1. Draw winner. No, got it. Ready? Log into your account? What the fuck? Okay, let's do this one. Now that I'm authorizing my account to all these third-party websites. I didn't select the winner. What's going on? Try authorizing again. I think, so what I'm going to do, guys, is I'm going to make a video of this. I'm going to have to pay for this, and then, well, let me see. Is there any others that are not connected? I feel like these are all connected. It's the same company. Twitter giveaway picker. How about this? Start now. No. That's not it. Okay, so I'm going to have to pay for this, and then what I'll do is I'll take a video of it, guys. So if everyone participated, this gives everyone a chance to make sure that they retweeted, and then I will pick it. I'll take a video of it, and you'll just take the win. I'll take a video of it tonight, and I will post it, and I'll also contact, obviously, who won. But that's it, guys. It's 5:02 p.m. This has been a pleasure. As always, if you're not a subscriber, make sure that you click the subscribe button. And yeah, let's look at BTC one last time. I mean, it's too early right now for me to say this is the bottom, but it is shaping up, I think, in a way that I would want to see, where you do have the absorption at the low. I just would want to see that this progresses a little bit longer before. I'm not going to get into any swings, put it that way. Right? I'm in my spot, happy in my spot, not adding to any swing positions or trades. But everyone have a fantastic evening.